Good morning, everybody. Today is Tuesday, March 31st, and we are going to get right into our economic data. Let's see, we don't have anything coming out till about 9 o'clock. We have JOLTS report at 9. There's something GDP for month over month for Canada coming out right now. Could move the market a little bit, but we'll see what happens right there. Last night, I think there was a tweet out from Trump saying that he could be ready to be pulling out of Iran. So the markets spiked up a little bit in Asia, and then they kind of just settled down. So we'll see what happens and how much truth there is to that. I think that there's definitely a lot of posturing going on with the Strait of Hormuz right now. He wants other countries to start stepping up and protecting that strait right now, seeing as that their dependency on oil for that strait is more vital than it is ours. So he wants them to start having some skin in the game. So I think that there's a lot of posturing going on that front. So we'll see what happens there. 9 o'clock, JOLTS, pay attention there. Tomorrow, we have something every day. I think I went over yesterday. Tomorrow, core retail sales, month over month, it's 7:30. Then ISM manufacturing at 9 o'clock. Thursday, unemployment claims. We tap off them, and then we top off the week on Friday. But I think the markets are closed on Friday because of Good Friday. But there's unemployment claims, so kind of strange how they have some reports coming out on a bank holiday, but we'll see what happens there. Anyways, let's get into it. If you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, and also go down in the description and join our Discord community. And today is going to be the last free day of live trading, so come on in and take advantage of it while you can. It's going to be from 9:30 a.m. to 11 a.m. Eastern time, so this will be the last free day of trading. So come on in and help me with questions, and then we can go from there. Also, I am setting up a Q&A live stream on Sunday, and if you go into the YouTube chat, I will set up another poll also. But if you go into not the YouTube chat but the Discord chat, when you join Discord, I'll have a poll there, and I'll have 3 time slots. If you just select one of those time slots, what works best for you on Sunday, we will be having a live Q&A. I'm going to start off. I have the first one and see how that works for everybody. I have 30 plus years of trading experience, so I have a lot of knowledge, and I'd like to help the community. And we're all actually working together, not against one another. So let's get into our start out here. I've been putting the Brent crude oil and the just the regular crude oil up there for starters right now. So Brent right now is at $107 a barrel right now. So you can see very elevated, not quite the high at 119. So this is all basically because of what's happening in Iran. Pay attention to that. It will impact inflation. It will be inflationary. And then if we go over to crude oil here, the difference between Brent and crude is here for the United States, and right now we're hovering at about a little over $100 a barrel, and then Brent crude is more for European dollars, right? So it's a little inflated out there in Europe than it is here in the United States. So hovering about 102 on the Brent crude, or actually on the crude for the United States, got as high as 119. So keep an eye on that. It will impact numbers for inflationary, but it's starting to settle out a little bit right now. But I heard some interesting numbers yesterday. They're still way lower than where they could be based on inflationary data. Back in 2008, I think they were at $124 a barrel. So anyways, let's get into the VIX right now. VIX, you have some gap down area right now, so I'd expect the VIX to pop up here and fill this gap here from this morning. Also, we still have this lower gap that was open here from Thursday of last week. So, and that's sitting right below the 20-day moving average of $25.82. So we'd like to see the VIX settle on down and keep settling down here so we can get back to some normalcy. I'm happy this is the last day of March. March, I think, was down 8% overall. Everybody was expecting March to be an up month, but I think due to the fact that oil spiked, obviously, with the fog of the war, it definitely changed the complexity of the entire market. So nonetheless, opportunity when the market pulls back, you just have to, be able to dive in and, not just dive in blindly. Obviously, you want to, have your levels. But that being said, if you're trading on a long-term account, ask yourself, what's the market going to look like 10 years from now at this price level? So that being said, let's get into the ES. Again, if you're new to the channel, subscribe to the channel. Hit that thumbs up button and like this video. Go down into the description and join our Discord channel for today's last free live trading. So let's take advantage of that. Here's our ES. Yes, right now. So here's our pre-market low from last Monday, 64.8350. In order to get continue to get some upward push, you're going to have to regain that. And that was before Trump came out and he said that there was going to be a 5-day pause with no future bombing. And then the market spiked up there. And then you could see as the week went on, it settled down, and then we lost that level. So now that's a break and retest level there. So if you do pop up in that level in the pre-market, when the market opens, that could be a break and a retest. You could see how it did that pre-market yesterday, broke it, came up right back up to that level, and then we lost it again. So could act as another break and retest level also. However, could break above it. I like this point of control here. 64.77. If we break above that and hold that, I wouldn't mind taking a long here and maybe plowing through that pre-market from last Monday and then making a move back up to this 65.23, which is in August of last year's high. If we can get through that, then we can start going back and closing out these open point controls. 65.8877 from March 24th, and then above that you have a 66.53.55. And then you're going to get some headwinds there because you have the 20 and the 200-day moving average sitting just above that. On the downside, if you lose the 64.2253, you'll give back all this pre-market and come down to yesterday's close. Yesterday's close was sitting at 63.8262. If you lose that, 63.7175 is your last line of support down there before you come down to 63.1875, which is end of July's high of last year. And then below that, if you lose that, you come back to February of last year's high, 61.6650, which I would say that if we did get that kind of flush sell-off, that's a pretty decent level of support there. So let's get over into the SPY. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, and then go down in the description and join our Discord community. Here we go, SPY. Hovering right at some important levels here. This is July monthly high of last year. You're going to want to get above that level. It's also sitting right at this point of control from Friday at 539.57. So if we get above that, again, here's that pre-market low from last Monday. It's, what is that, 641. So you're going to want, so what did I say, 539? Yeah, that's 639.59. So you want to get above that and hold, and once the market opens, and then if you can push through this pre-market at 641, you can push towards that 643.33, and that, which is a September 5th low. I would not be surprised if you got a little headwind up there. And then above that, you have the March 20th low at 644.72. However, if you push through that, I don't mind that push up into August of last year's high, sitting at 649.48. That would not be a bad level to push into also. And then if you can definitely get some good push behind that, then you have October's monthly low at 652.84, where I would imagine that you're going to get some definitely some resistance up there. On the downside, if you lose 634.92, 631.30 is your next level that I have down there. Below that, you'll probably have the pre-market lows. If you'll probably lose that pretty rapidly down to 627.04. And then below that, 619.29 is a monthly low from August of last year. But I think the markets are holding pretty good right now. However, you're getting a little headwind right here at this 639.59. So you have to plow through that and get through that pre-market low at 641 in order to get some upside for today. So now let's get over to the NASDAQ again. New to the channel, subscribe to the channel, hit that thumbs up button, like this video, hit that bell for future notifications on videos that I make. I like this hold here at 23,351.17. This is a point of control we had here from Friday. I like that level, holding that. Again, we're well below this. Actually, let me see if I had that marked out. I don't know if I have that pre-market low marked out. I thought I did. Let me go here and go 10. So, yeah, actually, I do have it marked here. Yeah, so we're well below that pre-market low from last Monday at 23,768.27. So I do, I would say, though, if we do get a push up into that, I like that as a break and retest. So we did not even come back and test that yet. So I think if the NASDAQ does get this push, we push through that 23,505 and then into this August of 2025 high of 23,616.25. I would say that you could get some good resistance up here at 23,768.27, which is that pre-market low from last Monday, and it's also the low of from the 23rd, the low from last Thursday also. So you've got two marks here, right? So here's a low, and then you broke it, right? So that's a break, and then to come back and retest it. So this is a pretty decent level of resistance. If you plow through that, I've got 23,904.50, where you'll get another level of another level of resistance. It's actually a November 2025 low there, so you should probably get some resistance there on the downside. If you lose this point of control, 23,351.17, 23,112 is your next line of support. Below that, you have 23,025.25. And then below that, 22,775 is August. It's a monthly low of August of last year. And then below that, we have a July low sitting at 22,582. Let's take it. So everything right now, guys, we're all below the moving averages, right? So here's the 20 sitting at 24,436, a 200 sitting at 24,562. And the 50 is way up there at 24,931. So when you're below all these moving averages, your play, even if the market rallies, you should be looking, you could be looking for pullback longs, right? Or you should be looking for, pop and fades, right? Because we are still below these moving averages. And until you get above these moving averages and you regain at least the 20 and the 200, you should not be comfortably sitting long for swing trades, right? Because we're still below all these moving averages. Now, the market typically is a magnet towards these moving averages. So you do have quite a bit of distance, not a bad risk reward to take some longs and sit on these positions for a period of time, but you're going to have to monitor these stops, right? And the problem with hanging on to positions for a period of time, when you have this geopolitical unrest, anything can happen, especially over the weekend. So I would say on a Monday, not a bad thing. Over the weekend, I would say very risky, right? You never know what's going to happen. So trade your levels and then make sure you have your proper risk in order here. Let's get over to the Qs, and then we will move on to Tesla, and then we will be done for the morning. The Qs just kind of hanging out here. Also, I like this 563.55 point of control from Friday. I like that level for support, and then I would not mind taking that all the way back into Monday's pre-market low, 573.25. So you got a pretty decent move, a $10 move you could take into that, and especially if you can regain yesterday's high. I would say yesterday's high here, 568.05, right? So you got, I would say, market opens maybe a pullback long, at least into yesterday's high. That's your first step. And then if you can plow through that, you got another line of support here, and then you could take it into the pre-market low from Monday of last week, Monday of the 23rd, right? So you could see where it came in over here, pre-market low, you popped up off it, you came down, supported it again, and then you broke it, right? So this is going to be your level of your break and retest, right? So that's going to be it on the Qs here. I'll give you some downside here on the Qs, though. If you do lose yesterday's close, it was sitting at 558.25. 551.68 is August of last year's low. Below that, you have a July of 2025's low, 544.66. And then below that, I like this 540.81 as a good line of support, which is a monthly high from February of last year if you do lose those levels there, right? Okay, so let's get over to Tesla. Again, if you're new to the channel, subscribe to the channel and hit that thumbs up button, like this video. Tesla, we came down yesterday late afternoon and hit this lower end regressional trend line, sitting here from the high of the all-time high from December 26. And it's right now, so you came down towards the end of the day, bounced off it, you came up, you rallied nicely. So we came down, we dipped just below it at 552, rallied towards the end of the day, about $6, came down pre-market, dipped again, and then supported it again. So nice level down here. And we got up to about 561, so pretty decent level here. Rallied about $10 off of that, off of this lower regressional trend line here. So you see this level, it's pretty decent. And now we are over that pre-market low from Monday of the 23rd, 550 or 356.88. So that's a pretty decent level right now. It's holding support. It's also holding support September high of last year, right down here, sitting at 455.99. If you lose these levels today, you're going to have that line of support coming down here again at 351.78. Lose that level, you have 348.98. What I would actually like to see on Tesla, we do have these open point of control levels. What do we have here? Let's make this a little bigger here. So we have point of control level that's open from yesterday, sitting here. This is the close from the previous day here. So this is the point of control. It's open from yesterday. Could hit it before the market even opens today. Sitting at what is that level there? 363. So we could pop up and hit that 363 before the market even opens. I would like to see a little pullback. I'd like not to see that fill before the market opens, but the way the market's moving, could fill before the market opens. So that's one open point of control. However, we still have this open point of control level down here, 333.78. I would like to see that fill, and then I'd feel comfortable. Then, okay, once this fills, then we could start feeling comfortable. Okay, now maybe we could start getting our V shape and start moving higher, and then start going after some of these open point of controls that we have. 388.90 is the first one above this 363. And then we have 397.89, way above that, above the 100-day moving average. We have 455.12, and then the last one is 478.39. So those are the open point of controls. I'm very happy we have those open way above us, and we only have one more that's open down below us at this 333.78. Those of you that are new on this station today, I've talked about these point of controls even last year. Sometimes it takes several months for them to fill. We had an open point of control last year. It took 9 months for it to fill. And a perfect example is we had this 365, and I think I closed it out already, but we had a point of control that I closed it out at 365, and it was sitting there since September of last year. So gives you an idea of these point of controls, how strong they are. The thing is, you just don't know when they're going to fill, but they do fill at some point, right? So let's get over and see what we're going to do for today. I'm going to have tomorrow's expiration date for the strike prices. I'm going to use a 360 call for tomorrow, expiring tomorrow. So you can see the premium price close at $3.15 right here. I anticipate this is going to open up a lot higher because we are higher than the close. We closed yesterday at 355, and so we're about $5 higher. So this will probably open up high fours, maybe even close to $5. And then I'm going to have I'm actually going to raise this to 355. Now, even though these closed at $5.10, because this is opening up $5 higher, this will probably open up in the $3 range, maybe the mid threes, right? So, but these are both going to be expiring tomorrow. And so that's what I'm going to start out with today. But we'll see as the market moves. I'll probably change these strike prices as the market moves around. And as it gets closer to the end of the day, if I'm still trading, I like to tighten up the strike prices and get closer to the actual trade, to the equity. So yesterday was a pretty decent day if you were patient enough to wait it out. I mean, yesterday was a monster day actually. So let's just say, let's show this. So we go over the 5-minute opening range trade, right? And so lately it's, before, like last year, it used to make your money in the first like 20 minutes of the day and be done. But now you have to be real patient. I was getting chopped up most of the morning, and then if you just stayed patient for the most of the day, like these wicks right here are very difficult to make money on, because especially this first one, right? Look at this. You don't know which direction to go. It's a tug of war between buyers and sellers. But that being said, you had your range of 367.29 and 363 for the low. So $4, call it a $4 range, not horrible. And then you tried to break it right here about 10 minutes after the market, and so that was a fake out right there. You could have made a little money on it, but you would have had been very quick draw here, right? Then the market moved up. Then again, right here at 8:55, so 25 minutes after the market opened, again, another fake out, right? Went up, tapped it again, tried to tap it again. So right here, so you tapped it once, twice, call it 3 times, 4 times, 5 times, 6 times, 7 times, 8 times, you finally got it. Then you really thought you were going to get it here on the 9th time, and then you pop right back up. Here's 10 times to drop back down. Here's 11 times, and then here's 12 times, and then, I mean, look at how many times you faked out. And then finally at the end of the day, and this is probably, when Powell was speaking more, now you finally got your sell-off. So you sold off, you lost your 363, and you got yourself, if you really stayed patient all day, you would have gotten yourself about $11 on that premium. So how does that translate? You pretty much, if you want to got a rule of thumb, it's probably a little more. You go 50% on that. So if you got call it $10, you would have made $5 on your premium here. So whatever premium you bought on your puts, if you bought a 1 lot, you would have made $500 on that, right? And, obviously you'd have to have a lot of, if that's part of your trade book, to hang on to a trade all day, then you make that. Is that realistic? It's not part of my trade book, but it could be of some other people. I usually trade a larger size and try to take a little bit out of the market and be done with my trades. I don't like sitting in trades for a long time, but sometimes I do. And, but that's really not part of my trade strategy that I like. But anyways, that's what I'm going to be doing today. 355 puts expiring tomorrow, 360 calls expiring tomorrow. Like this, subscribe to the channel if you're new, and like this video, and go down to Discord, in the description, join our Discord community for live trading. This is going to be the last free day of live trading for today. So hope to see you in there. And if not, I will see everybody tomorrow for pre-market report as usual. Have a great trading day, and talk to you soon.